Well, hi, Andrew Bell with you once again. Well, what an amazing year for real estate. That makes 5 consecutive years of growth. And of course, the ever-increasing question is, how long can it continue? The cost of a typical Australian home has soared to 8.2 times household income, taking Australia to the worst housing affordability on record. For our renters, it's also record highs, with rents consuming 33.4% of their income. Australia's median dwelling value is $865,000 against a median annual income, pre-tax income, of $104,309. The dwelling value to income ratio has also reached 10 times its number in Sydney, 8.8 in Brisbane, 7.7 in Perth and 7.2 in Melbourne. And listen to this, banks are hesitant normally to lend more than 5 times income for home buyers. So we are well over that. No wonder we're starting to hear conversation from APRA, and I'll touch on that in a moment. For first home buyers trying to save the magical 20% deposit, it now takes a typical household 11 years to save. The latest figures about price growth reflected November with a 0.5% rise in property values. That saw property values rise nationally by 8.7% over the last 12 months. And on a typical home, that's just short of $78,000. But there are signs of some easing. Our biggest markets, which of course are on the east coast of Australia, are all showing signs of a slowing in price growth. However, Adelaide and Perth are still showing strong growth, perhaps playing a little catch up with the east coast prices. So what is causing some of the slowing in price growth? Well, first up, the clear message is that the expected continuous drop in interest rates is not going to happen. The general consensus is that whilst the economy is still steady, it's also a bit sluggish with high inflation, and we're likely maybe to see an interest rate rise, but if there's going to be any drops, there'll be 2 drops, probably in the second half of next year. And that's subject to seeing an improvement in that inflation. What is truly starting to have an effect is the warning we've just had from APRA, that's the authority that oversees the banks, that they're introducing a debt-to-income home loan cap. Banks will be prevented from lending more than 20% of the value of new mortgages to borrowers with debts of 6 times their annual income. Typically, that would be a borrower buying a property, say, in excess of $1 million, but with an annual income of just $166,000. Okay, so I keep getting asked by people, how long can this real estate surge in prices continue? And the answer is, no one knows. No one really knows. It's clearly going to stop at some stage. I think we all acknowledge that you can't keep getting 8 to 10% growth in values every year if it's not matched by people's ability to borrow increasing amounts of money. And they can't do that unless their incomes are also increasing at that same sort of rate. So there's going to be a natural break in the market. There are some 50 years of industry experience under my belt. Now, I've typically observed 7-year cycles in real estate, and that's from peak to peak. Normally there are 2 or 3 years of strong price growth, followed by price correction phase of a year or 18 months, followed by a flatline period before the cycle runs again. The correction phase is usually triggered by some event that no one truly sees coming. That was an example of that was the 1987 stock market crash, or the global financial crisis of 2007, where the event happened overseas, overnight, and changed our markets immediately. None of us see anything coming at the moment, but often these things are just lurking undetected behind the scenes. The question I most often get asked is from people wondering when they should exit the market. I so often refer to Warren Buffett, regarded as the world's greatest investor. And his advice, buy when others are fearful, sell when others are greedy. I think that marries together with that long-held concept that a bird in the hand is worth 2 in the bush. For many, they see the wisdom of cashing out of this wonderful market we have at the moment, locking in some of the terrific capital gains, and sitting on the sidelines until great buying opportunities inevitably come about in that price correction phase. So for now, what's driving our market most fundamentally is simply an undersupply of properties. Australia's population growth is outpacing construction levels, and that's keeping a solid platform under the real estate market. 2026 is shaping up to be one of the most interesting years of the 2020s on so many fronts. So for those thinking about locking in some substantial capital gain in their properties, let me do one final shout out, one final call out for those who'd like to be part of the event 2026. The greatest marketing campaign, single best marketing campaign of its type held in the country every year, conducted by no one less than the Roe White Bell Group. It's the most high profile campaign, followed closely not only by the media, but by buyers who specifically come to the Gold Coast in January to see properties that are part of the event. So if you're thinking of planning and selling in 2026, January is the month and the event is the program you should be part of. If you want more information, the details are on screen now. Just reach out to us and we'd only be too happy to share information with you. But don't delay, we need to hear from you now. Enjoy your Christmas warm up and the lead up with catch-ups with friends and family, and let's make Christmas 2025 one of our best. Regards for now.